You were never meant to discover this information in the manner you are learning it at this moment. Not through an official government notice, not via your nearby Social Security office, and absolutely not through the evening broadcast. That is because those in charge of overseeing your retirement funds, the funds you contributed to throughout your full career of employment, chose to hide this information within complex legal language and official terminology, believing that was sufficient. Well, that is not sufficient. Not for you. Not for the countless Americans who constructed this nation through their labor, their effort, and their dedication. And certainly not at this time, because the recent modification within the Social Security structure that took effect on May 1st represents something that every retiree across America must comprehend prior to receiving their upcoming payment. Allow me to speak directly to you. I am not here to alarm you. I am not here to distort the facts or cause you to worry about an issue that holds no importance. What I am here to do is present precisely what occurred, why it impacts your regular income, and what steps you must take beginning today. Because the distinction between those who safeguard their retirement and those who gradually see it diminish nearly always depends on a single factor: knowledge, not chance, not relationships, not keeping a financial expert readily available, simply understanding the true situation and taking steps before the opportunity passes. So, here is what we will discuss. We are going to examine the cost of living adjustment that officially appeared in your May payment and why the figure they provided you might actually be counteracting you when you consider all the other factors. We are going to examine a significant update to two regulations that have been silently reducing funds from public sector retirees for many years, and why May represents the period when that situation finally begins to correct itself. We are going to examine Medicare premiums that are quietly diminishing your Social Security payment at present, and a lesser-known review procedure that could preserve you hundreds of dollars monthly that the majority of individuals remain unaware even exists. And we are going to examine the earnings threshold, the tax complication, and the precise actions you must complete this week to ensure the government is not retaining funds that rightfully belong to you. But first, let us discuss what truly occurred with the cost of living adjustment, because I believe there exists a substantial mismatch between what individuals were informed and what individuals are truly observing. The Social Security Administration declared a 2.5% cost of living adjustment for 2025. On the surface, that appears as though you are receiving an increase, and in technical terms, you are. For the typical retiree, that equates to approximately an additional $50 each month. Across a year, that totals $600. If you and your partner both receive Social Security, you might be seeing $200 or greater together. And yes, that amount is now officially included in your May payment. So, if you have not reviewed your deposit total lately, you must do so today, not tomorrow. Today, because here is where the mismatch begins. That 2.5% was determined according to what is known as the Consumer Price Index. It serves as the government's method of tracking how much routine items and services cost. And in principle, the cost of living adjustment is designed to maintain your Social Security payment aligned with inflation. It is designed to ensure that as costs rise, your income rises alongside them. But let me pose a question to you. Does your food shopping expense seem as though it only increased by 2.5%? Does your utility bill seem as though it only increased by 2.5%? When you refuel your vehicle or cover a medication or review what your coverage costs this year versus last year, does any of it seem like 2.5% accounts for the variation? For the majority of individuals, the response is no. And that is not merely an impression, it is calculation. Because the Consumer Price Index tracks a wide selection of items and services throughout the whole economy. But retirees do not allocate funds in the same manner as a 35-year-old does. Retirees allocate more toward medical care. They allocate more toward shelter. They allocate more toward the precise areas that have experienced the steepest cost rises over the previous 3 years. So while 2.5% might represent the overall economy, it does not represent your economy. It does not represent the truth of attempting to survive on steady income in a nation where all costs continue rising. Now I want to state clearly, I am not sharing this to cause you to feel discouraged. I am sharing this because recognizing the difference between what the government declares inflation to be and what you are truly observing serves as the initial move toward reaching wiser choices with the funds you possess. That $50 each month matters. That $600 a year matters, but only if you are not forfeiting it in another area without noticing it. And that leads me to the section of this that most individuals are not even familiar with. The section that could represent the difference between managing and truly advancing. Because while everyone concentrated on the COLA figure, something far more substantial was occurring out of view. Something that affects a quite particular set of Americans who have been receiving less from the Social Security structure for years. And if you held employment in the public sector at any stage of your professional life, or if your partner did, what I am prepared to describe next could return thousands of dollars directly to you. Actual funds. Funds you previously gained. Funds that were withheld from you under policies that were never equitable from the start. Remain with me. We have only begun. For many years, there existed two regulations concealed within the Social Security structure that most Americans never learned about until the moment had passed. The windfall elimination provision and the government pension offset. If those terms hold no meaning for you, consider yourself fortunate. Because for the individuals impacted by them, these two policies were accountable for cutting hundreds of dollars from their regular Social Security payments, occasionally more, year following year following year. Let me clarify how this functioned, because it is essential that you grasp exactly how inequitable this structure was. Let us suppose you dedicated 25 years serving as an educator in a public school system. Throughout that period, your employer did not contribute to Social Security. Rather, you participated in a state retirement plan. But prior to becoming an educator, or perhaps additionally during summers and weekends, you also held positions that did contribute to Social Security. You invested your effort, you paid your contributions, you qualified for your credits, and when you ultimately retired, you anticipated collecting your retirement plan and your Social Security payment, because you qualified for both of them independently with distinct employment. But the government viewed it differently. Under the windfall elimination provision, the Social Security Administration lowered your Social Security payment because they claimed you were receiving twice. They applied an altered calculation to determine your payment that could decrease it by hundreds of dollars per month. Not because you committed any error, not because you misused the structure, but because you happened to hold a public sector position that included its own retirement plan. Educators encountered this. Firefighters encountered this. Law enforcement officers, mail carriers, state and local workers throughout the nation. Individuals who supported their communities for many years were penalized for that when they retired. And it became more severe. The government pension offset proved even stricter. If your partner held employment in the private sector and contributed to Social Security, and you qualified for a partner payment based on their history, the government pension offset could lower or entirely remove that partner payment. We are referring to surviving partners, individuals who lost their husbands or wives, being informed they could not obtain the survivor payment their partner qualified for because they themselves possessed a government retirement plan. Consider that for a moment. A widow who dedicated 30 years instructing students in a schoolroom, whose husband labored in building and contributed to Social Security throughout his career, could be informed she receives nothing from his history. Not lowered, nothing. Because of a policy that regarded public service as a barrier. This represented the situation for approximately 3.22 million Americans. And for most of them, there existed nothing they could pursue regarding it. They sent correspondence. They contacted their officials. They participated in support organizations and advocated for reform. And for years, no progress occurred until now. The Social Security Fairness Act was enacted into legislation. And it removes both the windfall elimination provision and the government pension offset completely. Not lowered, not adjusted, removed, finished. And what that signifies in practical terms is that millions of Americans who have been obtaining artificially lowered Social Security payments are now eligible for their complete payment total, the total they ought to have been obtaining from the beginning. But here is the element that renders May so essential. The Social Security Administration has been managing the procedure of recalculating payments and handling back payments for all individuals impacted. And May is when a substantial group of those updates are anticipated to appear. Some individuals are going to observe their regular payment rise by $200, some by $400, some by even greater amounts depending on how much their payment was lowered and for how long they experienced the effect. And then there exist the back payments. If you received less for months or even years because of the windfall elimination provision or the government pension offset, the Social Security Administration owes you those funds. Past payments, single sums, actual amounts that were held from you under policies that no longer remain. Some individuals are facing back payments of $5,000. Some are facing considerably greater amounts than that. It varies according to your personal circumstances, your employment record, your payment calculation, and the duration these regulations were used on your record. Now, here is what worries me. I know without doubt that there exist individuals viewing this at present who are impacted by this update and are not even aware of it. They never comprehended why their Social Security payment was smaller than they anticipated. They simply accepted that was how the calculation resulted. They accepted the figure on their document and never challenged it because the structure caused them to sense that challenging it was not possible. I need you to listen carefully to this. Challenging it is completely possible. It has always been possible. And right now, with these regulations removed, it is more essential than ever that you review your payment with renewed perspective and confirm you are obtaining every amount you qualify for. If you held any public sector position at any stage of your career where your employer did not contribute Social Security taxes, you must take steps. If your partner held such a position, you must take steps. If you are a surviving partner and your payment was lowered or removed because of the government pension offset, you must take steps. The Social Security Administration is managing these updates, but they are handling millions of situations, and the individuals who reach out to them, the individuals who telephone and confirm and pursue, are the ones who obtain their funds sooner. I am going to provide you the precise actions to complete later in this video, the contact numbers, the internet locations, the documents, everything you require. But right now, I want to confirm you grasp exactly how meaningful this period is. Because for 3.2 million Americans, May 2025 is not simply another period. It is the period the government finally begins returning what it should never have withheld from the beginning. And we have not finished yet. Because even if the windfall elimination provision and government pension offset do not relate to you, there exists another update affecting your May payment that you definitely must comprehend. And this one impacts nearly everyone receiving Social Security. Let us discuss the element that is silently reducing your Social Security payment each and every month and becoming more challenging each and every year. Medicare, particularly Medicare Part B, because this is where I observe individuals forfeiting funds they do not even recognize they are forfeiting. And it frustrates me because most of it can be avoided if you simply understand what to watch for. Here is how it functions. For most retirees, your Medicare Part B premium is taken directly from your Social Security payment. You never view that amount. It disappears before your payment ever reaches your bank account. And in 2025, the standard Medicare Part B premium rose to $185 per month. That is up from $174.70 in 2024. So right there, you are covering an extra $10.30 every single month just for the standard premium. Over a year, that is an additional $123.60 coming out of your Social Security income. Now remember that 2.5% cost of living adjustment we discussed earlier, the one that was intended to assist your payment in matching inflation. For the typical retiree, that COLA contributed roughly $50 per month, but Medicare just reclaimed about 10 of those dollars before you even received them. So your actual increase of the amount that truly ends up in your account is nearer to $40. And that is only if you are covering the standard premium, because here is where it becomes considerably more difficult for many individuals. And this is the section that most retirees do not completely grasp until it is already costing them substantial funds. There exists something called IRMA, the Income-Related Monthly Adjustment Amount. It is essentially an added charge on top of your standard Medicare premium that activates if your income surpasses specific levels. And the term income here is carrying considerable weight because the government does not simply review what you are receiving right now. They review your modified adjusted gross income from 2 years earlier. So for 2025, they are basing your IRMA decision on your 2023 tax return. And if your income in 2023 was above $106,000 as an individual, or $212,000 as a married couple filing jointly. You are covering more than the standard premium, occasionally a great deal more at the highest income levels. Your Medicare Part B premium can surpass $600 per month. That is more than $7,200 per year coming directly out of your Social Security payment for Medicare by itself. And many individuals become caught in this situation, not because they are affluent, but because they experienced a single financial occurrence in 2023. Perhaps they sold real estate. Perhaps they withdrew a substantial amount from a retirement account. Perhaps they had investment profits from selling assets, one strong year on records, and suddenly Medicare regards you as though you are earning abundantly for the following 2 years. But here is what nearly no one informs you. You can challenge your IRMAA decision. If your income has decreased considerably since 2023, if you have retired, if you have ceased employment, if you have gone through a divorce, the passing of a partner, or any other qualifying major life occurrence, you can submit what is called a life-changing event appeal and possibly have your premium lowered back to the standard amount or near to it. The document you require is SSA 44. You can obtain it from ssa.gov or collect it at your nearby Social Security office. You complete it. You supply evidence of the change in your income, and you present it for examination. I have spoken with individuals who were covering $400 a month for Medicare Part B, submitted this appeal, and had it lowered back to $185. That is a preservation of $215 per month. That is $2,180 per year returned to their account. Actual funds, meaningful funds for someone on steady income. And they nearly did not submit because they believed the figure on their document was definite. They thought if the government stated they owed that amount, then that was simply the situation. It is not. The government commits errors. The government applies old information. And you possess every right to contest a decision that does not match your present financial situation. So if you are covering more than $185 per month for Medicare Part B, I want you to pause right now and consider whether your income has varied since 2023. If it has, you may be overpaying, and you do not have to tolerate that. Now, let me move to something that impacts an entirely separate set of retirees, but is equally essential. If you are receiving Social Security payments and you are still employed either part-time or full-time, there exists an earnings threshold you must be aware of. And the amounts updated for 2025. If you are below your full retirement age for the complete year, you can receive up to $23,400 without any decrease in your Social Security payments. Once you exceed that amount, Social Security withholds $1 for every $2 you receive over the threshold. So if you receive $30,000, that is $6,600 over the threshold. And Social Security would withhold $3,300 from your payments over the course of the year. Now, if you are attaining your full retirement age in 2025, the threshold is considerably greater. You can receive up to $62,160 in the months before you attain full retirement age, and the withholding rate is less severe. They take $1 for every $3 over the threshold instead of 1 for 2. And once you actually attain full retirement age, the earnings threshold vanishes entirely. You can receive as much as you desire with no decrease whatsoever. But here is the element that confuses individuals. When Social Security withholds funds because of the earnings threshold, that amount is not lost permanently. When you attain full retirement age, they recalculate your payment and provide you credit for those withheld periods. Your regular payment rises to account for the funds that were retained. But between now and then, your available cash experiences a reduction. And if you are not ready for that, it can seem like the government is penalizing you for working. And that leads me to one additional element that surprises individuals entirely each and every year. Your Social Security payments can be taxed. I know you already paid taxes on that money when you gained it. You observed it deducted from every paycheck for 30 or 40 years. And now the government wants to tax you once more when you finally collect what belongs to you. It seems incorrect because it is incorrect, but it is the regulation, and you must prepare for it. Here is how it functions. The government reviews something called your combined income. That is your adjusted gross income plus any non-taxable interest plus half of your Social Security payments. If that total surpasses $25,000 as an individual or $32,000 as a married couple filing jointly, up to 50% of your Social Security payments can be subject to federal income tax. And if your combined income surpasses $34,000 individually, or $44,000 as a couple, up to 85% of your payments can be taxed. Those levels have not been updated for inflation in decades. They were established in the 1980s and 1990s, and they have never shifted, which signifies every single year more and more retirees become included in paying taxes on their Social Security income simply because the cost of living increased and their payments increased along with it. The structure is gradually taxing more of your retirement income without ever formally increasing taxes. And most individuals do not recognize it until they submit their return and owe amounts they did not anticipate owing. So here is what I want you to complete this week. Not next month, not at some point. This week. First, sign into your My Social Security account at ssa.gov. If you do not possess an account, establish one today. It requires 15 minutes. Access your payment document and your earnings record. Review every year of your employment life and confirm it is correctly documented. Your payment is determined based on your highest 35 earning years. If there exists a year absent or a figure that appears incorrect, your payment could be smaller than it ought to be. Report it. Have it fixed. Second, if you were impacted by the windfall elimination provision or the government pension offset, pick up the telephone and contact the Social Security Administration at 1-800-772-1213. Yes, the wait periods are lengthy. Yes, it is irritating. But you could be owed thousands of dollars in back payments and an increased regular payment moving forward. That telephone call could be the most worthwhile hour you invest all year. Third, if you are covering more than the standard Medicare Part B premium and your income has varied since 2023, obtain Form SSA 44 from ssa.gov and submit a life-changing event appeal. Do not leave funds aside because you believe the government handled it correctly. They do not always handle it correctly. Fourth, if you are still employed while receiving payments, calculate the figures on your earnings compared to the yearly exempt total. Know precisely where you stand, so you are not surprised by an unforeseen decrease in your payment. You dedicated your entire life gaining this. Every early morning, every late evening, every paycheck that had Social Security contributions deducted before you ever viewed a cent of it. That was your money then, and it is your money now. The structure is not going to advocate for you. It never has. But you can advocate for yourself.